if we're looking at business growth, at what point do we need to start looking at business structures and that sort of thing? When do you first have that conversation?
From day one. Yep, straight away we need to establish why we're running the business. What is the ultimate goal here? What's your customer base? We strip it into all these different parts, but effectively, depending on the size of the business and the potential for growth, we track it every year to see when an optimum time is, because like you've said, there's different ways for owners to extract money, and it gets to a point where, being a sole trade, where you're subject to the income tax with HMRC, that's the 20% basic rate tax band, and then the 40% higher rate tax band. That gets to a point where actually under that scheme, it's not beneficial, and going down the director salary dividends route. And we work with our clients. If they want to just stay at the 20%, we keep them there. But the added bonus of having a limited company is the dividends have their own tax rate, and that typically has stayed below 10% over the last few decades.
So we can actually effectively get them more money at a better rate.
Yes, yeah.
And I mean, there are obviously other benefits with limited company. So, your liabilities are less extreme should anything go wrong, and things like that. So let's just say we've gone down the growth route, and we're growing and we're growing and we're growing, and suddenly we're going to go into, suddenly got 2 businesses, 3 businesses. Let's talk a bit on holdings here, and the benefits of why we would go to a holding co and that sort of thing.
Yep. So when you've got that kind of structure, 1, 2, 3 companies, all limited, you've suddenly got a lot of transactions going between the groups, and getting money from company 1 to company 3 can be quite convoluted and could cause tax issues if not done correctly. So by placing a holding company, which we call a parent company in the land of accounting, sits above these 3 companies, and it just becomes a vehicle for tax exempt money to be moved easily between the 3 companies for distribution where needed. And it creates a structure, and having a group structure in place is really powerful, because you can have company 1 do something completely separate to company 2. And they are 2 standalone entities, which are protected by a ring-fenced holding company. Because if you didn't have that in place and you had 1, 2, 3, you, Michael, would be the owner of said companies, and something happens over here, this could impact over here and ultimately impact you. Whereas having a holding company, like you say,
protect your assets in different places.
It's a separate legal entity.
It's also great if there's more than you as a shareholder potentially, because your other shareholder's going to want dividends out of that particular business. Potentially for your own personal tax planning, that's not great. So those dividends can get pushed up into the parent co, the holding co.
Yes.
And you can choose at what time you want to be taking them
and
out.
what works best for you. Yeah.
Obviously, we need to say at this point, every situation's different, and people need to seek advice, because there are rules and regulations, as always, on these sorts of things.